Hey guys, welcome back. Today in this video, we are gonna talk about the importance of time when you're trading the supply and demand zones. So without any further ado, let's get started. The first thing that you need to understand before going into why time is important is understanding how supply and demand zones are formed. And we have made a separate video, which I'll link in the description. So please go ahead and watch that if you already don't know the types of supply and demand zones and how they're formed. So here, let's say that we have a demand zone. Now, as soon as the demand zone is formed, let me just zoom in through charts. And here we can see that there is this rally base and rally demand zone, and that demand zone is drawn at the high and low of the base region. So at the close of this bullish candle, the zone was complete and this zone is formed. Now on the very next candle, we see that the market picked the pending orders and then gave this very impulsive move in the bullish direction, and there are multiple candles that show us that buyers are in very good momentum after picking the orders from this demand zone. Now this order was picked up instantly after the formation of this demand zone, and this worked out in our favor. Now if we talk about when the price came back again, here we can see that over time the zone became weak, and this is the main agenda of this video, that as time passes by, the buyers, if it's a demand zone, then the buyers, and if it's a supply zone, then sellers will lose interest and they will start looking for other levels. So here, let's say that zone formed here, and as market kept going upward and it did not come back. So with the passage of time, the buyers or and the sellers will lose interest in this zone. They will start detecting the other zones and other key levels. And when the market comes back, as you can see here, after picking, it did bounce a little bit in the bullish direction, but this zone failed here. And we can see that the market just broke this zone. So this is because the market came back after a lot of time. As you can see here, the zone was formed on August 10th of August at 4, and the market picked the orders right away, but then it came back again here in this area, and then here the zone was broken. So let's take another example to understand it a little bit more clearly. Here we can see that there's this supply zone. Okay, so at the supply zone, and this is our rally base drop supply zone. So at this supply zone, the forecast is that the market will come back in order to pick the pending sell orders of the institutions, and then it will give a very impulsive bearish move. Now let's see what happens. As the time passes by, the market did not come back, and it did come back here, but here it just broke this zone and it went through this zone. So again, since the market took a lot of time in order to come back, the zone did not remain valid anymore, and because the market took a lot of time, and the price just went through this zone. So the price took time to fill the orders at supply zone, and the zone failed. So now let me show you the zones where the market came back right away in order to pick the pending orders, and those zones worked really well. Now here, as we can see, that in this zone there's again a rally base rally demand zone, and after the formation of zone at the close of this candle, the market went a little bit in the bullish direction and then came back in order to pick the pending buy orders. Now after picking these orders, market gave this very impulsive move. Now as you can see here, when we would be trading this zone, we would put our entry here, put our stop loss here, and our take profit would be according to the strategy that comes with the supply and demand indicator. By the way, you can also use our supply and demand indicator to find the supply and demand zones automatically on your chart for you. If you're interested, please check the link in the description. Now, as you can see here, according to the demand zone strategy, our stop loss would be here, and as I said, our entry would be here, and the market kept going in the bullish direction till this level. So this would have been a very good trade because the market came back right away after some time and it picked the pending orders. Now what we learn from this is that as the time passes by, the buyers or sellers lose interest because they are more interested in finding the latest levels as the price action is happening. So what we can deduct from this discussion is that the time is inversely proportional to the interest of buyers, sellers, or sellers to buy or sell from a particular key level or particular price. So this is the main idea, that once you have found the zone, if the market does not come back after right away, after within short time, then you should not trade that zone, because it would not work out very well in your favor. And when the market comes back, then you should make sure that the zone is fresh. You should not trade the zone from which the market has already picked the pending orders. So now let me go through a few examples that I have drawn here to show you how the trades are working. So here we can see that this is the supply zone. The market picked the pending orders from here, and then it went in the bearish direction, as you can see here. So these orders were filled right away, and then market moved in the bearish direction. If we keep moving forward, we can see here that the demand zone was formed here, and this is our drop base rally demand zone, and the buy orders were filled right in the very next candle. So the market gave this bullish move in the bullish direction. So this is again a very good demand zone, and this is again a very good place for market to come back to pick the pending orders. And now if we keep moving forward, we can see here that at this zone, at this demand zone, this rally base rally demand zone, the orders were picked right away in the very next candle, and that's why you can see the formation of this very impulsive bullish candle. And from this level to this level, the market did give a very impulsive bullish move. Now, if we keep looking forward, you can again see that at this supply zone, the orders are filled right away in the very next candle, and then market gave this impulsive bearish move. And in this demand zone, the market picked the pending orders from this very next candle, and then again gave this very bullish, big bullish move in the bullish direction. So I hope you're able to understand that when the as the time passes by, the buyers and sellers lose interest, and you should take that into account when you're trading the supply and demand zones. And you should always look for the supply and demand zone trades when the zones are fresh and market is coming back, in order to pick the pending orders right after the formation of the supply or demand zone. I hope you like this video. If you have any questions, please comment down below and I would love to answer them. Also, don't forget to like, share, and subscribe. See you guys in the next video. Thank you.